Why Bitcoin's dip below $80,000 is a once-in-a-lifetime buying opportunity. Bitcoin has just dipped below the $80,000 mark, sending shockwaves through the crypto market. Panic is setting in, fear is rising, and many investors are scrambling to sell their holdings. But what if I told you that this moment, right now, is one of the greatest buying opportunities in Bitcoin's history? In this video, we are going to break down why this dip is temporary, why Bitcoin's long-term potential remains massive, and how smart money is taking advantage while retail investors panic. Stick around to the end because we'll also reveal key psychological strategies that institutional investors use to accumulate Bitcoin during market downturns. Before we dive in, make sure to hit that subscribe button and turn on notifications so you don't miss out on valuable crypto insights. Also, drop a comment below. Are you buying Bitcoin at these levels? Or do you think it will drop even further? Let's discuss. Now, let's get started. Understanding Bitcoin's recent price drop. Bitcoin's decline below $80,000 has left many wondering, what caused this sudden drop? Is it market manipulation, profit-taking, or something bigger? Let's break it down. 1. Market cycles and corrections. Bitcoin has historically gone through boom and bust cycles, and corrections are a natural part of the process. The current pullback is actually smaller than past corrections, meaning it's still within normal market behavior. Previous bull runs have seen corrections of 30 to 40% before surging to new highs. This dip? It's just part of the game. 2. Institutional profit-taking. Large institutional investors and whales often take profits at key psychological levels, like $80,000. When they sell, the price drops, creating fear in the market. But what happens next? They buy back at lower prices, accumulating more Bitcoin while the average investor panics. 3. Macroeconomic factors. The broader economic landscape plays a huge role. Interest rate decisions, inflation, and global events all impact crypto markets. With rising global debt and economic uncertainty, Bitcoin remains one of the best hedges against fiat currency devaluation. So, while the media may be hyping up this crash, the reality is that this is a temporary correction, not the end of Bitcoin's bull run. Why this dip is a golden buying opportunity. Now that we understand why Bitcoin dropped, let's talk about why this is an incredible opportunity for investors. 1. Bitcoin scarcity will drive prices higher. Bitcoin has a fixed supply of 21 million coins, and over 19.6 million are already mined. With demand increasing, especially from institutional investors and ETFs, Bitcoin's price is primed to go higher in the long run. Remember, the last Bitcoin will be mined in 2140. Supply is running out, but demand is growing. 2. Bitcoin halving is around the corner. Historically, Bitcoin halvings have led to massive price surges. The next halving is in 2028, meaning this dip could be one of the last opportunities to accumulate Bitcoin before the next exponential bull run. 3. Big money is still buying. While retail investors panic, whales and institutions are quietly accumulating Bitcoin. On-chain data shows that long-term holders are not selling, meaning the real players understand Bitcoin's long-term value. Now, let's talk about how to avoid emotional mistakes and make smart buying decisions. How to buy Bitcoin during a market dip. Ignore the noise and stick to the facts. The media thrives on fear and uncertainty. They love to exaggerate crashes and make people panic. The best investors don't follow headlines. They follow data and fundamentals. 2. Use the dollar cost averaging (DC) strategy. Instead of trying to time the bottom, use DCA to accumulate Bitcoin gradually. This removes emotion from investing and ensures you don't miss out on future gains. 3. Follow the whales. Look at on-chain data to see where institutional money is flowing. If the big players are buying while the market is fearful, that's your signal to accumulate. Where is Bitcoin headed next? While no one can predict short-term movements with certainty, here's what analysts are forecasting for Bitcoin's future price potential. Short-term predictions, 2025 to 2026. Bearish case, if Bitcoin consolidates for a while, we may see prices range between $75,000 to $85,000. Bullish case, If institutions continue to accumulate, Bitcoin could retest its all-time high and push toward $100,000 plus. Midterm predictions, 2026 to 2030. Bitcoin reaching $250,000 to $500,000 is highly possible if adoption continues and global economies weaken. Long-term predictions, beyond 2030. If Bitcoin becomes a global reserve asset, predictions of $1 million per BTC are no longer unrealistic. Countries and institutions accumulating Bitcoin could push prices to levels we haven't even imagined yet. The smart money strategy. So, should you be worried about Bitcoin's dip below $80,000? Absolutely not. History has shown that those who panic sell during dips regret it, while those who accumulate during crashes become the wealthiest investors. The key takeaway is simple. Bitcoin's long-term trajectory is still upward. Every dip is a buying opportunity, and those who act now will be the ones who profit in the future. If you got value from this video, don't forget to smash that like button and subscribe for more crypto insights. Let us know in the comments, where do you see Bitcoin's price in the next 5 years? Let's keep the conversation going. Thanks for watching, and we'll see you in the next video.